And one of the first things I did was
Tell
after
me,
seeing the,
tell me you got that.
oh yeah, yeah, no, I got that. That's my
Oh
entry.
man,
Pre-market.
you're gonna be a hero of the revolution to keep that up.
7.7 hour does
Yeah.
the CEO went. I sent this chart to the CEO to show him like, listen, had my account been live, I would have been up 7% on a day, and he went bonkers. He was like,
Yeah. What are we waiting on?
but the thing that I did was I used Claude to code the crossover, and
Yeah.
now I get these arrows.
Yeah.
So
Yeah.
Claude is quite powerful. I can use Claude to
Yeah. So
also,
that one right there. And then this is just sort of, if you take that previous, yeah, stop wiggling. If you get that where the maximum BB excursion is,
yeah,
that breakout from the previous max excursion
yeah,
is always going to be amazing. And then when it
yes,
fails to even hit the PSAR, protected by the VWAP second position.
second position.
Yeah.
Yeah. So that was exactly my thinking on it. What I did was I kept on trailing kind of visually, I want to say, um, kind of looking for troughs and just kind of moving my stop conservatively under those troughs because
Yeah. Here's a trailing stop indicator I want you to code up. And that is your K percentage, your
percentage.
keep some percentage. So you're in a position, you got your RL as long as your RL10 is going up, that's good.
Hmm.
And then you have an SMA 30 here.
Yeah.
So I want you to code something that let's see, measures this distance. And then cuts that into make that I want to keep we're going to index that.
Yeah.
So that's just the easiest way to do it. You say 0 and
100%.
100
Yeah.
and say I want to keep X percentage of that. So if these are 20% increments, three,
Yeah.
4, 5, and I want to keep 60%, it puts your stop right there. And then you could imagine at some point when you invoke that, it would end up having a keep 60% of the maximum favorable excursion.
Yeah.
And now you have a pure money management. And then when that thing rolls over like this,
Hmm.
you had better have that locked in as your strategy.
Yeah.
And
Yeah.
then you could just say, yeah, so now it's like this. That thing there's going to be a slight acceleration factor on this, right? Because you could
Yeah.
imagine the RL10 did did this. It's hard for it to do exactly that, but
Yeah.
imagine it did that. Uh, the SMA 30 is slow, but it'll always be cruising up. So at this point of maximum excursion, your 60% might be here, but each subsequent bar is getting smaller and smaller.
Yeah.
So there's actually a little bit of a acceleration factor because the SMA 30 is rising from the bottom and squeezes you out. So each time that it does not go higher, this increments a little bit closer. But if it does go higher, it just adjusts and now it's actually lets you it will accelerate that in order to stay 60% of the way away from that, or preserving 60% of whatever you have.
Yeah,
So the stop will get a little bit, well, when the RL10 is speeding away from the 30, that size is expanding.
exactly.
It's still rising.
Yes,
But when it stops, it's also rising because the
yes,
SMA 30 is catching up.
exactly,
And so
exactly.
you could just put a little dial on that, and then you could have a set of rules which says, given my maximum favorable excursions,
Yeah,
and just pick, and you just get a list of those on MNQ. You now end up getting a histogram of the MFEs,
yes,
MFE histogram.
yeah,
And then you can say, when that thing starts, the histogram looks like this. This is how far it goes before it starts to fail.
yeah,
And it goes this far before it starts to fail. And then you'll find out what the shape of this histogram looks like and how far
yeah,
it goes before it starts to peel off.
yeah,
Then once you get a uh, average MFE
yeah,
or MFEA,
yeah,
and then MFEA plus one is really, now it is abnormally good,
yeah,
then that might set a rule that tells you, hey, I used to have 60%, but it's above one standard deviation above my normal.
yeah,
Then I maybe I go from 60 to 70 to 80. I start dialing it up to keep more and
mm,
more of an exceptional position.
yeah,
Now, the your next rule is, if I put on a second position, all you're concerned about now is the net money.
exactly.
Now, as that position goes up, it doesn't matter how many positions are in there. What matters is
How much I
how
get to
much,
keep.
what's the net.
Exactly.
And you say, hey, I want to keep 60% of my net, and and then when I'm out, I'm all out. That
Yeah,
way, this thing will, when you put a second position on, it let's see, no, let's see. Yeah, it won't matter that the second position is on. It'll just say, here's how much money that I have open, and I want to keep 70% of it or
yeah,
80% of it or whatever it is. So that little set of rules, once you get that listed, you can, you got to do a little bit of math on your, but you can do that on a single symbol.
mm-hmm,
And, and then set rules for how you want to adjust the K percentage, and then just keep this in mind. As long as that thing is going up, you're good.
yeah,
And then what that does is it tells you how to handle this space where the RL10 is above the SMA 30.
yeah,
Because
yeah,
you know from the OBUG that when that RL30 or RL10 comes back and crosses the SMA 30, now that trade is done. And now
yes,
I got to think about this trade
yeah,
to the downside.
yeah,
So this little K percentage thing will help you figure out how to systematically exploit that purely on the basis of money management, no technical indicator required. It'll get you to the penny,
mm-hmm,
you know.
mm-hmm,
You may decide, let's see, what you got to come up with is, if I've got two positions on, it's got to be able to tell you that if I got one position on and I'm up $10 and it comes back $1 on one position, my net value is 9.
Yes.
But if it was on two positions, a retracement of that is
$1
now
is
down
two.
$2. I think I think when you add that second position, it's going to decrement the value of the position by double.
Yes.
I think it will. So
Yes.
you just verify that, and then it won't matter how many positions you put in. It's just the net value is the net value. I think what that's going to tell us is if you get a good enough entry, you got to get the second position. You got to decide, do I get the second position in when it crosses the average, or do I try to get a second position as soon as I can? I'm not sure yet.
Mm,
If you wait too long, it's too long,
exactly.
right? So it's almost like when it hits the average trade is probably the sweet spot. Whereas if you're greedy, you want to do it as soon as you're two times no lose plus dinner for two. You know what
Yeah.
I mean? Which is probably around 1 hour.
Mm,
But then monitor that thing carefully. So we just got to be careful you don't prematurely cut it based on, but that's where you could say, look, uh, until it gets to an average, my K percentage is 20%
mm,
because that's no lose plus dinner for two.
true.
And then if it gets over the average and I've put a second position on, now maybe I go to 50%.
Yeah.
And if it gets past plus one standard deviation, keep 80% or something like that. Some kind
Yeah.
of,
Yeah. Yeah. Yeah.
but you could put that into your rule set about how to adjust the K percentage based on what your net is compared to the histogram of maximum favorable excursions.
Mm,
Because you're going to see that that when MNQ is rising, you're going to get this kind of oscillating price until it breaks. Like
yeah.
it only goes up, each little subsequent round of buyers only pushes at a certain height. And after two favorable excursions, you don't want to give back too much of that,
Exactly.
especially if you got a second position on. Anyway,
Yeah.
that should give you enough to go. But the K percentage is really cool.
That's yeah. That's a really cool way of doing it.